We continue X-ray on xauusd. As it matters, every mistake counts. So we need to look in detail to see what price is doing. We are concerned about our supply roof. We are concerned about our demand floor. So when approaching this market, we have a supply roof, red color, an ascending trend line. We have here a support structure, break of a support structure, play resistance, break of a resistance structure, price broke again, and a return as a resistant, break of a resistance structure. We have a support, price moved up, came down, broke the structure. On a lower time frame, you will see a retest, and on this line, we are going to create a supply roof zone. We like to treat it as a zone. So we allow price to fall into the box. A fall into the box will be a fall into the zone. To guide your bias, it must be in a zone. So let's take this as our supply roof zone. So we'll be expecting price to get to the supply roof zone for sell. If you look critically, every time price came into the zone plus minus is not more than 50 pips. So it's okay to have price in this zone. All we want to see is that every resistance is picked within the zone. We do not sell if price does not approach the zone. So the zone is an allowed parameter for sell. So we need a zone for floor, a floor demand zone. On the floor demand zone, we want price to play into the support structure to look for a buy opportunity. So we're going to label it green, green for the buy, green for the buy. So we want to have it and allow price to play into the demand floor. On the demand floor, we'll be ready for the trigger, a buy trigger. So this will be, we're going to use a green color signifying buy. So for every time price returns to the floor demand zone, anything into the box, it's a potential buy. When we look critically from the roof, we have created a zone. Price came here, got rejected, returned to the same zone, got rejected, and we return to the floor and create multiple climbs. Higher high, higher low, higher high, higher low. A typical characteristics of uptrend. So on the third touch, price has left to return to the supply roof. Price came into the zone, consolidated with a double top, a bearish price action, indicating that the cycle of the roof has been completed. Now price is headed to the floor, a demand zone. On approaching the demand, we will be looking out for confluence. The idea behind searching for confluence on the demand or on the supply structure is to guide your bias appropriately. We look out for other supporting evidence. Do we have evidence? Is there a break of structure? Is there a break of a support line? Is there a break of a resistance line? We have here a resistance structure by way of resistance rejection candle. You can see the candle, a very strong rejection candle here, after which price had made an uptick, break of a resistance structure. Price return on a similar rejection candle, indicating a rejection to this level. We also have a horizontal support resistance structure at this level, guiding why price rejected this level. So you can see it. We have here a resistance structure, a break of a resistance structure, price return on retest. After this price action, we take this off to have a clean chart. Our idea is to keep not more than 5 lines in a chart. The more lines you have in a chart, the more your brain is fogged. A fogged brain can never have a clear directional bias. So your mind must be sound and clean for you to see the true direction of the market. And one of the ways to do that is to limit your lines, if possible, one or two better. Anything in excess of five will lead you into a danger. So we'll come down here. We have here a support structure. We have here as a support structure, break of a support structure, price return as a resistance structure, creating another ascending trend line, which we will hold responsible for future price action. So this becomes a temporary roof, while we have here as also another temporary floor. So on this temporary roof, we are looking for supply. So whenever price comes into this box, we will see what sellers do at this level. When sellers return to this level, what did they do? They sold off supply. They got to the roof again. What did they do? Supply. A break of a supply structure. Price return as SR for uptick. The broken resistance structure now became a support structure, a foundation for uptick. While we moved up and got rejected at another level, 2672.18, we create another roof by close of 4 hours candle. Now price is playing within this pattern. So it is expected that this becomes our temporary roof, because if we were able to break this roof, then we will go back to retest the long-term supply roof where institutions are hiding. This is where you have the bearish blocks. The bearish blocks are already at this level, and they know particular days where sell will be activated. So using this strategy, we can also tell by applying a simple trick. When we add a vertical line on daily, we can tell wherever price crosses this ascending trend line, we set a buy or sell order. So if we're anticipating a sell on this day, we move our vertical line and a horizontal line. Where it crosses with the ascending trend line gives us a double confluence where you expect for the day. If we're expecting sell on this day, we move our vertical line and our horizontal line. This becomes our sell order. If we're expecting a buy, the same in a similar manner. So this is another strategy for the day to enable you take your buy sell order using our market structure strategy. It's well detailed. It relies on evidence, no speculation. All we do is interpret the chart in a holistic manner. And when we look at this trend line acting as a resistance, now support, we saw a breakout from this structure on Tuesday. Price broke out from this structure. Close of Friday of the week, we can see, ladies and gentlemen, price has returned to the buy floor. From the structure of the market, price returned to the buy floor. We like to change the color, or let's maintain it as black. We see here resistance structure, a break of a resistance structure, a retest candle for a buy, price return again for a buy, and we are taking note of every character, because when character change, structure is broken. It's always changing character, CHOCH, that leads to break of structure. So when price return at this level, we found support due to a broken resistance become a support for further uptick to the upside. We got rejected and create a roof. It is important to allow price to create a pattern. What pattern are you looking for in the strategy? We want a supply roof and we want a demand floor. Without a supply roof, it is impossible to know where you will have a comfortable sell. Without a demand floor, it's impossible to know where to wait for a buy. So now we have a demand floor, a temporary demand floor in a form of ascending trend line under close of 4 hours time frame. And we also have a roof. So we allow price to play into the structure or play into the zone. On return to this level, what happened? Price moved to complete the floor demand. On the floor demand, we had first touch, we had second touch, we had third touch, while buyers and sellers continued to argue on a potential decision. But on getting to the floor, we had a double confluence. The double confluence and ascending, long-term ascending trend line, playing higher high, higher low, series of time price. When you look at it, came into the zone. We are in the green zone. And when we are in the green zone, the right thing to do is to keep a buy bias. When we are in the red zone, the right thing to do is to keep a sell bias. So if price return us to the green zone, where we'll keep a positive bias, which is buy. At this zone, there is demand. So we are here. So price has moved. Now we go to the temporary floor, temporary roof. On this roof, we have a serious decision to make, but we already broke out. So price returned to the buying floor. This is a new demand floor. Why? We bought here before. We bought here before the break of the structure. Close of Friday have broken the structure. But we face a temporary resistance to the roof. Like I said, the supply roof is always where you wait for sell. So we'll be seeing if price will be able to break this roof. If price able to break this roof, it further shows that the demand is still high and that price might make its way to a long-time supply roof where the bearish order blocks lie. On ascending manner, they already know where they want to sell, and we have a strategy that approaches that accurately. We have a strategy that approaches that accurately, tested over a period of time, proven to be true. So if we fail to break here open of Sydney into Tokyo, if we fail to do that, and if London section fails to do that, then the weekly candle will drop. Yes, because we are still in a monthly candle. If we apply the one candle rule, the monthly candle is still fresh. So if we hit here and face a resistance, it will become a monthly rejection. But on a weekly, we broke above the resistance structure to meet another resistance. If we cannot break here, then the one candle rule applies, which is the monthly rejection. So if we have a monthly rejection at this level, then technically we could be sliding down. But if we break above this by the open of the new week, then it will be a foundation for further uptick to get into the zone of 2,700 and um, 45 into 55 into 60. So this is possible when we look at the current geopolitical tension in the Middle East. It is easy to understand that as a safe haven asset, gold remains a top tier asset in terms of geopolitical tension, in terms of turmoil, in terms of global economic crisis, in terms of inflation. When big firms are looking for hedge, gold is a go-to. So if central banks decide to bring in the needed liquidity after drop at 2,600 level, 2,603 level, this could be a buy. But if this is not the plan, then we want to see price return to this level where we have a green ascending trend line for a buy. But we believe for uptick, there has to be a grab of liquidity from the downside, meaning the supply need to dump over 1,000 pip to reignite a buy idea. So for now, this is what we see interpreting the structure of the market. So let's see what happens at this level. At this level, where buyers break past this level. Yes, we broke one structure. A resistance structure has been broken to return price on a buy demand floor. And close of Friday towards the 910 area, price dropped from 62 level into 55, closing 57. My previous video outlined this area as a potential sell zone as a result of the breakout from the ascending trend line, which will we saw it as a retest. So this also can be treated as a retest. That is the 2,662 level as a retest to a broken from a breakout from an ascending trend line, and this also a touch to the roof. So we are having here a confluence, but the beginning of the week will tell if the analysis is right or not. So we have a two-case scenario here. A breakout from the roof will be a further uptick. If price respect this roof, then price will drop. Yes, price will drop because we are going to bring in the one candle rule. If we reject here, then we will apply the one candle rule, which is what? The monthly candle. The monthly candle is still fresh. So we will consider here as a monthly candle rejection to drop back. So this is for now all we see for the yellow metal. Metals will continue to surge. Metals will continue to surge due to commercial and industrial application. So we'll be looking at silver, we'll be looking at copper, we'll be looking at other precious metals to see their global demand and how we can use charts to graphically explain where the market is heading to. So for now, we will stop here. And the next idea will be on silver.